Well, we upgraded to a buy rating last week with a price target of $40. And the reason for the upgrade, the tipping point, if you will, was the announcement of a new CEO and with the opportunity to move in a different strategic direction for the company. But overall, the company already has very solid loyalty with their customers already, and we think that can continue going forward.
Within that, is it just to get it shaped up, shipped out, and 2 years from now they sell it out to a big company?
Well, you never know what direction they'll end up taking, but ultimately I think the initial goal is really to sort of rein in what they already have and head into a strategic direction that makes sense where investors can sort of get on board with where they're going. Because the hardest part to do usually is to bring that customer loyalty in and be able to monetize it over time.
And where are they going? Talk about the relationship between Starbucks and Green Mountain Coffee. I've heard they've been on the rocks recently, perhaps.
Well, it's interesting because this has sort of been going on for quite some time, but ultimately Starbucks has its own process and where they want to go. And in Starbucks, they actually have multiple levels, if you will. So if you're talking about the Verismo, that really is a very different product than what you're talking about with the K-Cups. Now, in my opinion, we're really looking at a different occasion. And so the Verismo was initially pitched as an espresso machine, which ultimately is supposed to keep competing with the Nespresso brand. And that's the way we view it. However, obviously, it can be used for single-serve coffee as well.
The collapse of the stock is sobering. It's almost like a Netflix. If you compare the steady increase of Starbucks, even with some store challenges there, versus this just outright collapse of Green Mountain, if you look at any chart at any time of Green Mountain, it's unprecedented. What's the why? Was it corporate arrogance?
Well, I think part of it is just, and then some of it is pretty traditional, if you will. It's actually, if you look at the chart of Green Mountain, it looks more like a .com stock than it does a consumer stock.
Yes, thank you. Better said.
And what's interesting is that that's unusual within the consumer complex. You don't get that many examples of that. Netflix arguably is one of them. But ultimately, these are companies that even in the .com days, if they continue to have a brand that consumers are willing to support over time, they can find their base and grow from there.
Is it hard then as an investor to own it? I mean, I talk to a lot of day traders. This is a day trading special for them. So does it make it difficult for a longer term time horizon?
I think it becomes easier now. In the prior years when it was 100% growth of the top line and trading at 60, 70 times earnings, you're talking about a very different dynamic than what you're dealing with today. If you're looking at the name today, you're looking at a double-digit top line growth company with about 11 times PE on fiscal 2013 numbers. Very different situation than it was in prior years.
The margin is pretty cool. Operating income, they get like 15 cents on the dollar. Can they improve the income statement? Is there value there, or is it just grow out the top line?
I think in the near term, you're going to see more, and this is the way we're modeling it, not just them, but Starbucks as well. We're actually expecting to see some additional spending behind the brands to compete, because they're going to be not only competing with each other, which most investors you probably are talking to are looking at, but most of those investors haven't even brought up Nespresso over the years. And Nespresso's coming to the U.S. And they're gearing up now. They're getting ready for their next round of commercials starring Penelope Cruz. Looking forward to that. But ultimately, it's going to be a very brutal battle.